Hello and welcome to this video. In this video, we're going to be talking about the worst tax on the planet, in my opinion, which is called payment on account. So if you have self-employed income or you're having to do a tax return, then this video is going to be very important to you. So stay tuned and we're going to be talking about exactly what it means with payment on account. Hello, my name is Aaron Patrick. I'm a chartered accountant, a certified UK trainer with a fancy new logo, that QuickBooks chap on the internet, and also head of account here at Boffix. Now, today's video is all about possibly the worst tax there is and will ever be. It's a tax called payment on account. So for people who are unaware, payment account affects people who have to complete a personal tax return. And normally the worst affected are people who have self-employed income, therefore someone who has their own business. Now the reason that this tax is so nasty and something that I try and actively avoid as much as possible is because it's a tax that really does hamper you for success. If you think about it, most businesses start off where they probably make very little or even make a loss in those first couple of years. Because as a new business, you've got to invest in your business, you've got to try and make it start up, you've got to try and find your customers. You're starting most of the time from day one, from scratch, from zero. And as you start ramping up, you start to understand the implications of the more money you earn, the more tax you have to pay, and you start having to think about what tax return to complete, and all that sort of stuff starts to come into place. And for most of you out there, listening to a channel like this is where you get the opportunity to learn most of those little bits so that you don't feel like you're alone in that process. But as you start getting better and better and your business starts to improve, then your profits are going to improve with it. And once your profits hit a certain threshold, suddenly you don't have to just start worrying about the taxes that you need to pay at the end of a tax year, but you've got to start worrying about paying for next year's taxes as well. Essentially doubling up and doubling your cash flow burden as soon as payment accounts hit. That's why for me it's by far the worst tax out there, and it's hitting you right at the very worst time. Right when your business needs it the most, you're going to be in a position where you've just about got on top of what to expect for your taxes, and then suddenly that tax return figure is a whole lot more. With that being the case, this is why we want to be talking about now payment on account. So join me as we understand it and figure it out together. So what is payment on account? Well, for most of us out there, we're probably starting to understand what it means to actually having to pay your tax return. If you think about that typical timeline, it looks a little bit like this. Imagine year one. In year one, you're going to start your business at a point, and you're going to keep that going all the way until the end of a tax year. So to keep it simple, let's say the 30th of the 3rd. Then remember, from a tax return point of view, what you need to do then is prepare yourself because the tax return is due 31st of January. And at that 31st of January, that's when most of us have to pay our personal tax bill. Now, your personal tax bill at this point is going to be influenced by the profits that you've made. So at this point, you're going to be thinking about bringing in and understanding how much profits your business has made, and that's going to influence what that final tax bill is going to be. On top of that, there could be other factors as well. Maybe you've got other employment income or rental income or other form of income that goes on that personal tax return. But effectively, you should come up with one figure to pay. And that one figure to pay is going to be crucial to determine if this payment on account situation, the one we don't want, is going to be something that's going to affect you. So let's have a look. Effectively, if this figure on here is above £1,000, then there's a real good potential that you're going to be hit with this payment on account scenario. You see, if the amount that you owe is over £1,000, there's a very, very good chance then that you're going to trigger payment on account. The only time you can get away with that is if majority of your tax is paid at source, e.g. it's all coming from employment income. If majority of your tax is employment income and you have enough of that to be able to have, say, a tax code change to be able to pay it throughout the year, then you can get away with it. But if it's over £1,000 and you don't have any other forms of ways in which you're paying your taxes, there's a very, very good chance, in fact, you're going to be forced into payment on account. So what does payment on account mean? Well, effectively, payment account is all about trying to make sure that not only do you pay for that tax bill that we've just shown in that diagram, but also you've got to start paying for next year's tax bill as well. And they do it in two stages. What they want is half of the estimate at 31st of January and the other half on the 31st of July. And then in effect, next time you come around to have that other 31st of January, your next available year, then what should happen is that you take into account what you've already paid to that date, and then you'll either get a payment due because you've got some more to pay, or there's a refund due because you've actually overpaid based on the estimates that have been provided and not had probably as good a year as you expected. So let's have a look at that as a diagram. So imagine then this hit £1,000 in this first year, and imagine it was just a straight £1,000 you had to owe. That means in that first year you wouldn't just have £1,000 to pay, but also they would want £500 on top, giving you a total of £1,500. So we look back at the next year though, in year 2, then you're going to start your year as normal, but then there's going to be a midpoint, 31st of July, and at 31st of July you're going to have to pay another £500. Then we come to the end of the year like normal. Now you're going to calculate that next 31st January just as normal. So it's going to be how much profits you've earned, and you're going to come up with a tax bill. Let's say for this example your tax bill was £1,200. You had a slightly better year. Well, already at that point you've already paid £1,000, what we would call payment on account. Therefore you only have to pay over £200. But it doesn't stop there, because then you're into payment account for the next year. And at that point then, you need to pay another £600, giving you a total of £800 at 31st of January, and then you'll have another £600 to pay next 31st of July. So as you can see, all the numbers are starting to stack up. And from a cash flow point of view, yes, you're paying exactly the same amount of tax as you would have done without payment on account, but you're paying it much sooner than you would normally pay it. In fact, 50% of it, you're paying it a whole 1 year sooner, and then the other 50%, 6 months sooner. Now, in some circumstances, that can be a blessing, because in some circumstances, especially if you had a zero tax bill in that next year, then you'd actually get the refund back. You'll get the full £1,000 back into your pocket because you've overpaid for that point. So in very few circumstances, the payment on account can be a really slight benefit, but my argument would be, well, why pay that money over in the first place? So what can you do about payment account? Well, actually, payment account is an area where you can do some significant tax planning to try and make sure that you are justifying and being as efficient as possible with your personal tax cash flow. The changing of your payment account won't affect one iota of how much tax you physically have to pay, but with sufficient planning and being really savvy with your payment account means that you will have the option to be able to hopefully save quite a significant amount of your cash flow, and in theory make sure that you only pay tax when it's due. So what options do we have for payment on account? Well, the first one is to not get over £1,000 in the first place. If at all possible, find ways to either do a partnership and split the income, look at becoming a limited company, trying to find ways to take advantage of some of the tax benefits out there like super deduction. If it's possible to keep your tax bill below £1,000, remember this is tax bill, not profits, then if you can keep that tax bill below £1,000, then you won't have to worry about payment on account. What else can you do? Well, actually, that payment account, the way that it's calculated by HMRC, is just a straightforward 50% of what your estimate profits are going to be. And those estimates are pretty much just going to be what you made in that particular year you've just done your tax return. And you do have the power to reduce your payment account if you feel there's going to be a significant reduction in your profits in that year. So a really savvy way of making sure that you've got everything under control is to make sure you've got real-time information. Making sure you're using QuickBooks, making sure you're using someone like Bofix to be able to make sure that you know when you come to your 31st of January tax bill, you know how much tax you actually have to pay for the next tax year. That way, if it is significantly reduced, then you have the ability to do a reduction on payment account and therefore be able to reduce how much you need to pay. And don't just think about that 31st of January tax bill either. Think about that 31st of July one, that mid-year tax bill. If you can get your tax return completed way before that period, so you've got from basically the beginning of April to 31st of July, then you could completely wipe out the need to do a payment on account. because you might be able to find out exactly how much profit you made, and who knows, you may have already contributed enough in the 31st of January. That's why payment account is one of those areas you need to do a lot of tax planning to be able to get the most out of it. So there you are, payment on account in a nutshell. As you can see, majority of the time it's all going to be about making sure you've got the right amount of data and the right amount of time. But I do believe that if you get payment on account right, it's going to be a position where you're going to be able to significantly affect your cash flow position. Therefore, it's definitely a time where most businesses are going to have the opportunity to not just survive, but thrive. Let me know in the comments below, have you ever been stung by a payment account? Is payment account something that still needs a little bit more explanation for you? Let us know below and we can make sure that we reply to as needed, or maybe even a follow-up video about exactly how payment account is calculated. I know for certain that payment account is one of those taxes that takes a lot of people by surprise. And again, it's by far, in my opinion, one of the worst taxes out there, because it generally is punishing you for actually going out there and making a really good go of your business. That being said, there's ways in which you can plan around it, so make sure you use our advice. Try and find the best way possible to make sure that your payment account's payments are as accurate as they possibly can be. Don't just leave it to estimates, don't just leave it to HMRC. Have an opportunity to have that real-time information to calculate what your tax bill should be, and then use your payment on account accordingly. Just be careful, because if you do reduce that payment account too low, there is potential for interest out there, and there is potential for penalties for late payment of taxes. That being said, the savings can be significant, so it's definitely something to look into. My name is Aaron Patrick. It's been an absolute pleasure to do this video for you. Don't forget to let me know below if there's anything else you want to cover on this topic. Don't forget to like, subscribe, all that jazz. This channel is growing and it's all thanks to you guys, so continue that great work. I will see you in the next video. Bye for now.